we actually think oil prices are heading to $65 by this summer. There are three reasons really why oil will rally further. First, vaccines, slow rollout, but a big positive impact on demand. Second, the policies put in place by government post the COVID shock help oil demand in terms of income distribution, green capex. And third, and probably the one that will last the longest, really is the supply underinvestment that we now see around the world. So we've seen fast gains this year, but the market is rebalancing quickly. And so we expect higher prices will be needed later this year to get supply to restart finally.
All right. So what exactly is the main drive? I mean, we talk oftentimes about the imbalance in the markets right now. We talk about supply concerns. We talk about demand concerns. Which are the overriding ones driving the trade right now? Is it the idea that supplies are being managed properly out there, or is it the fact that demand might actually recover faster than some people thought?
So it's actually both. If you look at the last 3 months, for example, the demand story hasn't been great, right? We've seen the return of lockdowns, demand growth has stalled, and the supply side has dominated. It's the cuts, of course, but it's outright the signs of underinvestment. We're seeing production disappointments pretty much everywhere around the world, Latin America, Asia, Africa. As we look to the next 3-4 months, I think the demand side will prevail, right? With vaccines, warmer weather, you'll see an acceleration in oil demand. And vaccines do matter a lot for oil, right? 75% of international travel is still idle. If vaccines allow for that to restart, then you get the big impulse. And so the question at that point is, once demand rebounds, can supply follow? And that's the difficulty, right? Geologically, it's hard to turn production on and off. And so the deficit just gets bigger and bigger through this year. And by the summer, you've normalized excess inventories. You've gone a long ways to normalizing OPEC spare capacities, the two ingredients necessary for that reset higher in oil prices. So you said that it's not easy to kind of turn on and off the spigots. I mean, I understand kind of the logistics behind it. But these countries have been kind of ratcheting down production for months now, maybe even a year plus at this point. Is it that hard for them to then bring supply back online? It seems like everyone's itching to do that. So the desire definitely is there, right? Think about OPEC's two mandates: help in the short term, the rebalancing, but raise production to support fiscal revenues next. And you could see it, whether it's the UAE, whether it's Russia, this eagerness to ramp up. The question is really about the ask, right? If we think about our demand recovery, it's roughly 5 million barrels per day between now and this summer. OPEC will struggle to achieve that, right? That would be more than 30% larger than their largest production increase over 4 months since the 1980s. Because, after less investment, you need to drill more wells, and that does take time. So over time, they can achieve it. But I think the core point is oil is a physical market. So if they're late by 2 months, you just end up with a tight physical market, the key driver to higher prices. And that's starting to already show in the oil market, right? So if you look beyond just the price itself, oil gives us thermometers on the rebalancing. So the shape of the curve, the physical price, and those actually today already point to a fast tightening market. So the desire is there, the capacity is there. It's really the velocity that I think will struggle to meet what will be a large demand rebound.
Shepard Smith here. Thanks for watching CNBC on YouTube.